For those who are new to investing, there are two kinds of investment. First is income, or we known as dividend investing, while the other is growth investing. By starting to invest early into the right companies and letting them compound, it will definitely benefit us financially in the long term. Investing is a marathon. It takes lots and lots of patience and discipline to build up a good portfolio with good companies. There are always short-term fluctuations in share prices, but if you were just to buy the good companies and hold them in the long term, they should do well. So for those who are new to my channel, I'm Ben, who likes to do finance-related videos. So in this video, we'll look into the two types of investment and how the power of compounding effect is so powerful that it's possible to build up dividend portfolio that can easily hit 1,000 a month. Dividend investing focuses on building dividends or income, while growth investing focuses on the capital gains from stocks. Both will give decent returns in the long term. What you need to understand is how are good companies able to constantly gain in share price. Companies gain share prices for two reasons. 1. Stronger fundamentals and better earnings. Second is share buybacks. Some companies do not like to give dividends in some countries due to tax reasons. For example, in the US, they have a 30% dividend tax which is not desired for most investors. Therefore, the next option to reward the shareholders is through the share buybacks, as it will concentrate the pool of shares, making your shares more valuable. For dividends, it's just companies sharing a part of their income to shareholders. For example, banks usually give sustainable dividend payout at around 50%. So if we look at a quick example, if Bank A earns 1 million in the first year with a payout of 50%, they'll distribute 500k as dividends to shareholders. If the next year, Bank A does well with income growing to 1.5 million, they would distribute 750k, and if the pools of shares stays the same, you as the shareholder will get a 50% increase in dividend as well. Of course, if the pools of shares increase, the distribution that you receive as the shareholder will definitely be lesser because there is more dilution happening. Next, let's talk about investing in growth companies for compounding your investment. For growth companies, in my opinion, it's simple if you invest in the correct companies. You buy good companies and keep hold of it for the long term. Looking at the Magnificent 7 companies, they have provided an annualized 10-year return of 37.01% as compared to the S&P 500 index of 10.71%. So if you see the performance chart, investing 10,000 in these 7 companies in 2014 would yield $230,108 by 2024. This meant that if you have invested evenly into Tesla, Amazon, Alphabet, Apple, Facebook which is Meta, Microsoft and Nvidia in 2014, the return would have been 2,221.07% for the last 10 years. There will definitely be bumpy roads as the share prices go up, but history has shown time and time again that as long as the company is still strong and doing well, their share prices will constantly grow up as time passes. So how do these companies keep growing even though people say that as they grow bigger and bigger, their growth rate will slow down? It's because they have strong moat, constantly reinvesting their capital back in the company and doing share buybacks. So why is this economic moat very crucial in businesses? It is because it's the business ability to maintain its competitive advantages over its competitor in order to protect its long-term profits and market shares. If you see in these Magnificent 7 companies, these 7 companies have their individual economic moats that they are dominating in. That's why they have constantly been performing well, including their share prices. Unlike the past dominated companies which did not invest heavily back into themselves, these 7 companies are constantly improving themselves And at this AI revolution, with the constant reinvestment back, they are constantly able to perform better and better in their earnings. For these big companies, once they reach a point where they feel that they got too much capital, they will usually do share buybacks and announce dividends. So that's where a lot of returns can also be rewarded to shareholders in terms of capital gains. If you're at an age where you can let your money compound, having a percentage of portfolio invested for the long term in the growth stocks is definitely worth it. So if you find the video informative so far, please hit the like, subscribe, and comment if you have any inquiries that you'd like me to talk about. If you're interested in investing in these growth companies, there are cheap brokers available in my referral links below. Thank you, and let's continue with the video. Next, let's talk about dividend stocks. For dividend companies, the key idea is to constantly buy good dividend stocks. How it works is simple. Dividend is essentially the company taking a portion of their income and rewarding shareholders as dividends. There are different factors to look at for different types of investments, such as REITs, stocks, and trusts. I will not go into too much details because it will be too complicated, but you can watch my previous videos for more information. The main idea of compounding is to start investing early both your cash and the dividends generated by your stocks. The earlier you start, the better, because it will become an exponential growth. Based on the current market, especially in Singapore, with the high interest rate environment, dividend stocks are priced lower as their dividend yields are in attractive levels of about 6%. So let us use some examples to elaborate more on the power of compounding. Taking a conservative approach with 6% return, if you want to reach 1,000 a month, it will take 12 years if you increase your dividend stocks by $1,000 per year. But what I want you to focus on is the amount required to invest to hit that 1,000 increment annually. As the years goes by, the amount of cash you have to come out with to hit that annual increment gets lesser because you have your own individual dividends to build it up. By year 12, at 6% dividend yield portfolio, by reinvesting your dividends, you will just need to top up an additional $5,667 for the year just to hit an increment of $1,000 in dividends. So this is a very simple but effective way of showing you the power of compounding. The best part is that if the dividend company you invest in is always increasing their dividends, your initial dividend yield of the portfolio will go up, making the dividends you receive from your investment to be more than 6%. To let it compound even more, let's say if you are comfortable continuing to invest annually of $16,000 on top of your dividend reinvestment, you will see that at year 8 and 9, you have hit your dividend target of $12,000 per annum. That will be a 3 years difference in hitting your goal target just by investing more. Of course, if you're a high earner, the amount of annual investment or opportunity you can make will be definitely higher. This will allow you to achieve even higher dividends at an even faster rate. Regardless of which style you choose, both will bring you financial freedom as long as you invest in good companies and holding them for the long term. Of course, another important basic thing to reach financial goal is to spend within your means. Without inflating your lifestyle to your salary, you will definitely have more opportunities to invest and compound your money for your retirement. Moreover, when it comes to uncertainty or distress in the world such as war or pandemics, all the stock share prices will drop. With the understanding of your companies that you have bought, you will be able to buy them knowing that the company's foundation hasn't changed, giving you very attractive returns. I hope this video helps to raise awareness when it comes to compounding your investment. Please hit the like, subscribe, and comment on how are you doing with regards to compounding your investment. You can also support the channel by hitting the referral links down below. Thank you, and I'll see you in the next video.